Thank you for joining us at XM.com for today's market comment by Rafi Boyajian. I'm Maria Bashirdes. Equities were muted while the greenback was broadly firmer on Thursday as the relief rally on the back of this week's cooler than expected US CPI readings lost steam following some not-so-soft data yesterday. Treasury yields regained their footing to bounce higher from the CPI-led slump as stronger than expected retail sales and manufacturing figures undermined the market's conviction that the Fed will begin slashing rates next year. The US dollar rebounded from more than two-month lows against a basket of currencies, while shares on Wall Street paired earlier gains to close only marginally higher. But the reaction was nevertheless modest, and rate cut expectations were only slightly reduced, once again underscoring the fact that investors are quicker to price in rate cuts than to price them out. However, a further pullback in stocks is possible today should the latest weekly jobless claims numbers, as well as other data releases, also beat expectations. Investors will be on guard too for any policy-related comments from the Fed's Waller and Williams, who are due to speak later in the day. But as was the case on Wednesday, there could be some upside from the earnings front. Retailers are in focus this week, and after Target's strong results set the bar high yesterday, it will be Walmart's and Macy's turn to post their earnings before the market open. Alibaba's earnings will also be watched. In Asia, however, traders were not impressed by the outcome of the much-anticipated face-to-face meeting between the US and Chinese presidents at an APEC summit yesterday. Although Biden and Xi made progress on certain matters, such as military cooperation, the talks marked only a slight thawing of relations between the two superpowers. For Chinese investors, there was a lot more at stake from this meeting than for their US counterparts, as the country's leaders are struggling to kickstart the stalled economy. Overall, the economic picture outside of the US isn't looking particularly encouraging at the moment, with GDP contracting in both the Eurozone and Japan in the third quarter, and China's recovery still appearing very patchy. If there is a silver lining, it's that inflation is firmly on the way down, and for currencies such as the euro and pound, this may not be entirely negative. Thanks for watching today's market comment here at XM.com.